Hi, here we are going to look at FIFO, first in, first out. The last video I made, we discussed about weighted average based on IS2, which is the unit how to measure our cost of the inventory we sold based on average. But here is FIFO. But before you can make use of FIFO, you need to make sure that you go to edit preferences, item and inventory. You have to be an admin before you can see the company preferences, right? Then you go to advanced inventory settings. Then make sure that on FIFO it is selected. So here it is selected. So I'm going to cancel. Another way for you to confirm if you have this information, if it is on FIFO, you go to report, then you go to inventory. You see we have aging, inventory aging summary and inventory aging detail, right? So let's go ahead. So the transaction is going to be similar with what we did when we in the last video for weighted average. So I'll still go for designer handbag, but this the same price, everything, but you're going to see now that the price for the costing is going to be different. So the first one we bought was for 112. So let's use a date. Let's go back. Let's pick a date from back. So let's go for 5. Then save and new. Then we'll still buy from Abdul. Then we select designer handbag. Then we buy 3, but this time around 120,000. Then from here we select the next date. So let's say the next time we bought was on the 6th, and this is the date. So save and new. So the next time we're buying again, so I want to have it just like we did for the other example for average costing. So this also has to be on another date. We are buying this for another date, and the quantity here is let's say 6. Yes, it's the same thing, 6. So 135,000. Okay, so we can now go ahead and save and close. So before we go ahead, let's quickly go to our report and look at our inventory, then inventory aging detail. So you see that on the 5th we bought 5. This is the price. On the 6th you can see the days, number of days, 210. On the 7th, which is today, 0 days, 536. Okay, but this first one was based on 112, the second one 120, the last one 135. So let's now go ahead and make a transaction. So let's say we now go to customer and create an invoice. So let's say to Idris. I'm selecting Idris. Now the dates, let's say I want to, let me just use 8. Then selecting designer handbag. Now the first purchase was that was made was 5. So I'm just going to say 4, so that it remains 1. So 4. So of course I should expect that this 4 would go for don't mind this cost. Let me just change the let's go for this one. Okay, so 4 will go for 112 because the first items were 112, right? So but 5, but here now we are selling 4. So let's save and new. Then once we save and new, let's quickly go to our report, then inventory, profit and loss, company and financial, then profit and loss standard. So now the sales was made on the 8th. So let's just check our report for 8. I'm going to click on 8, and here too I'm going to click on okay. Okay, here has to be 8. So let me click here again, 8. So I'm going to refresh this. Now you see over here we are having 448. So let's quickly use our calculator and see if it matches. So of course 112 times 4. So let's say 448,000 divided by 4. We're going to have 112, which is correct. The first batch that came in was 112, but there were 5. So now let's go ahead and create another invoice. Now let's say the remaining one from the first batch. 1 is remaining from the first batch. So I'm still going to set to Idris. Then we'll select the item, then handbags. Then this time around we are selling 2 for simplicity. It means 112 for one and 120,000 for the second one. The 2 of them will reflect as our cost of the goods sold. So I'm going to select 9. So let me quickly go ahead and save and close. Now we'll head back to the report. We'll go for 9. So let's select 9, and here to select 9. So we refresh. Now when you refresh, once you click, you see we're having 232. So let's confirm what happened. So let's clear this. So 112,000 plus 120,000. This gives us 232. It means our inventory is valued at this amount. The cost of inventory, cost of goods sold. But of course, when you go to inventory again and you go to the inventory valuation or agent summary, I think we have it already, agent detail. You see here is now showing us that we no longer have the first 5. That one is gone. Now from the second 3, we've sold 1, which is the remaining 2. So our inventory is going to be valued based on the amount we have here. Okay, so let's go to sell again. Of course, we've confirmed from this transaction. So let's go to sell again. So let's say we are left with 2 from the second batch, which was purchased by for 120 each. So I'm going to select the Zana bank again. Now I'm going to make it 3 so that the 2 will go for 120, 122 will go. Then this last one is now 135. So let's see how this record will be. Now let's go to 10. Then I'll go ahead and save and close. So let's go to our report again and see how this will be reflected. So go to 10, and then this also 10. Now let's refresh that. Now for these items, let's check what happened. So remember, we are left with one item, 2 items worth 120,000. So let's say we have 120,000 plus 120,000. What do you have? 240 plus 135,000. What do you have? 375 is what we have, and 375 is what we have here. So this is first in, first out. So from this you can see that everything is intact as we are supposed to have it based on the cost. That of course, while selling, you can decide to increase the price so that it will fit in based on the price, the cost. Yes, so you can change that here. So you might not sell the 3 of them 162. You can also still change the invoice amount, the sales price from this angle based on the cost, the increase in the cost, right? So this is how you undo first in, first out in QuickBooks Desktop.